5-minute chart. All right, we're going to classify this trade as a scalp, and you can see it here on the 5-minute chart. This is what we were looking at. All right, so if we were to zoom this out to say a 15-minute to get a better perspective, right, we're going to show you guys that this is really a microcosm of all of the different things that we've been talking about over the past few videos. All right, so what we want to showcase here is how we were able to enter short, why we got out in areas that we got out, and how we protected ourselves against this up move here. Okay, now this up move did take us out of the trade, and in a way that was a bit of a mistake because as you can see, price is going back in the direction of the short position that we took. But all in all, right, this does translate into 2 more wins that we add to our win percentage just for this demo account that we started. Okay, so again, what we like to say is don't pay attention to the profit. Pay attention to the actual results. Okay, if you can maintain a 95%, 92% win percentage, guys, there's no way that you will go broke ever again in your entire life. This is why this is important for people to at least take into consideration the things that we're talking about, because we use the same 2 premises every single time when we talk about the market. Where's the liquidity? Where's the imbalance in the market? Where will price go? Where will it turn around? Okay, same basis on every single trade that we take, and it doesn't matter if it's a long-term daily chart or if it's a 5-minute chart. Okay, so we're on a 15-minute here. Let's walk you through actually on a 1-minute so you guys can see this step for step and what we were actually thinking. All right, and it's actually spaces things out quite nicely so we can get a view. All right, so how do we take this trade? Price did push down and it came up to snatch liquidity to the left-hand side that we were looking at here. Okay, so think about this. You know, all of these different candles are just 1 minute in price action. So you have a lot of volatility here, right? Price going up, price going down. But once we saw that price set a high relatively equal to this high and it broke through it and then immediately just turned around, okay, you got that spike and then boom. We saw this as an overextension in price on the upwards movement. All right, so we were able to easily just kind of watch price action move. And then once this second down push started, we took the short. Price sort of sat sideways and then it started to move in our direction. So when it started to move in our direction, we placed the stop loss about right here. Okay, and price continued to flow that way. All right, so eventually we moved our stop loss to this position right above this high. And as you can see, price continued to move down. We took partial profit here, okay? And you can tell that these are things and actual buttons that we're pushing by these little red arrows and blue arrows, okay? So this little red arrow here, okay, that I'm circling, that's the entry. The exit is here. So we're doing this on Paper Trading and TradingView. You can set this up for free. It's very easy for you to practice trading in the market. And we'll actually do a tutorial on how to set this up. It's pretty simple to do. And this actually will help you in regards to trying to find areas to take positions, eliminating emotions out of the trade. There's a lot of different things that you can do once you start to paper trade. Partial close here, took half of the position off. Okay, this is just me taking profits. I left the rest in, and as you can see, I took it right sort of at the peak point where price turned around. Okay, so here was the perfect level to take profit. We took the profit, price turned around on us, and then it took us out once it reached for our stop loss here. Okay, so this is the trade from top to bottom. And what we're going to show you guys is that the same rules apply on the long-term charts versus the short-term charts. Where you get in, where you get out can all be equated to 2 things. Where is the liquidity? Where is the imbalance in price? Where's the market pushing price or pulling price to? All right. Once you answer these questions in your mind, you can easily hit these buttons to get in and out of trades very quickly, very effectively on the 5-minute, 1-minute, 15-minute chart if you're scalping. Okay. So just a recap of it. We entered short here, placed our stop loss below where our entry was. And the reason why we placed it here below our entry is because once we're up in the trade, if the market turns around on us, we don't want to be the victim of that, right? We'll take the short profits. We'll take the 5-second moves that, you know, push down in our favor and then automatically reverse against us. As long as we're taking something out of the market, we were successful today. Okay. As long as we're taking something out of the market, you can maintain the 90%. Okay. But if you allow yourself to sit in the trade and just price just runs and runs and runs against you, that's where you're going to hurt your portfolio. That's when you're going to get into the mind state of just let me hold on to this because it's going to turn around. It won't. All right. It won't turn around. It's going to keep going that way. It's going to keep putting you deeper and deeper and deeper into a loss, and you will eventually capitulate and sell that position. That's exactly the way that the market will work against you. And as soon as you do that, right, it's going to take off the other way. All traders can tell this story. So how do you avoid this? You move with the market, okay, at points when the market's overextended. All of this upwards movement had to come back sometime. When? Today, right? Today. And we picked the point when price was coming in. Basically, after a grab of liquidity, we entered this short to ride us down here, okay, to partial close right at the peak point, right? So if you people tell you all the time, you can't catch the bottom, you can't catch, we call it the bottom, okay? This is catching the bottom, guys, partial close. And then we got out halfway through, back up to the upside. So this is possible, folks, based off two simple methods, all right? So look above here, the video will pop up. You will see, you know, how we use imbalance and liquidity to actually get into and out of trades, why we actually took the profit here, because if you just look to the left, liquidity is grabbed here, right? So the same rules that apply to the top side also apply to the bottom side. The liquidity was grabbed here from these two lows, all right? Price has the rocket fuel to go higher. There's buyers in this market right now, okay? The bias is bullish. So this little move right here, it didn't have to take much liquidity, just break just below this line, and it's going to take a ride higher. All right, guys. So these are the things that we take advantage of in the market. And you can sit here and do this all day long once you become proficient with it. All right. So that's the scalp that we took today. Hopefully someone found some of this information a bit useful in order to start to build up their gravitas to do this. And I recommend getting yourself a paper trading account, because if you know how to paper trade, you can apply those skills to a live account and actually really turn up and make some money. All right.